Hey everyone, and welcome to The Explainer. Today, we're diving into a seriously fascinating contrast happening right now on the world stage. While so much of the global economy is hesitating, caught somewhere between lingering inflation, high public debt, and geopolitical uncertainty, the United Arab Emirates is experiencing a massive, defiant economic boom. So, how is a single nation outperforming the global average so significantly? Well, that's exactly what we're going to unpack today by looking directly at the data. We're going to go from top-tier macroeconomic policy all the way down to what people are actually buying in the shopping malls. Okay, let's dive into this. Here is our roadmap for today. 1. Defying the global slowdown. 2. The twin engines of growth. 3. DFM versus ADX. 4. The luxury spending boom. 5. The gold standard. And finally, 6. The future outlook. Starting with Section 1, Defying the Global Slowdown. We're going to kick things off with that big 30,000-foot macroeconomic view. So before we zoom in on the UAE, we've got to ask, is the global economy actually slowing down? Well, the short answer is, yeah, it's definitely facing some serious friction. I mean, the International Monetary Fund sees global inflation thankfully easing up to about 3.8% in 2026, which is good news. But the recovery? It's incredibly uneven. The world is still actively wrestling with major downside risks, things like renewed trade tensions, high interest rates, and those notoriously sticky services costs that just won't seem to budge. Consumers all over the world are absolutely feeling the pinch. And this brilliantly illustrates the divide. You've got the IMF projecting a pretty sluggish global economic growth rate of just 3.3% for 2026. But then you look at the Central Bank of the UAE. They're projecting the UAE's real GDP growth at a surging 5.6% for that exact same year. That is a massive outperformance, right? The UAE isn't just surviving these global headwinds, they are literally accelerating right through them. So what's their secret weapon? Well, it's the non-hydrocarbon sector. We usually associate the Gulf strictly with oil, right? But the UAE's actual economic buffer is this robust 6.1% growth in its non-oil sectors. We're talking financial services, manufacturing, construction. Throw in a remarkably low 1.3% inflation rate recorded for 2025, and you've got an economy that's highly shielded from global price shocks. Let's move to Section 2, the twin engines of growth, and see how this builds into the institutional engines organizing all this national wealth. The timeline here is just staggeringly fast. Look back at the year 2000. In March, the Dubai financial market is established. Just a few months later, in November, the Abu Dhabi Securities Exchange launches. Fast forward a mere 2.5 decades to late 2025, and total UAE bank assets are hitting a mind-boggling 5.34 trillion dirhams. To put that into perspective, in just one generation, these institutions have transformed the UAE into world-class global financial hubs. Which brings us to Section 3, DFM versus ADX. Let's take a moment to personify these two distinct stock exchanges. First up, we have the Dubai financial market. 1 trillion dirhams. That is a massive market cap of the DFM. With 69 listed companies, the DFM is heavily focused on retail investors and regional stocks. If the DFM were a person, it'd be that dynamic, super accessible local entrepreneur who knows the regional landscape inside and out. It's the absolute go-to exchange for everyday traders looking to get a piece of the local real estate and service sectors. Now, contrast that with the Abu Dhabi Securities Exchange, which boasts an even bigger market capitalization of 2.78 trillion dirhams. The ADX has 90 listed securities and is a magnet for heavy institutional participation and massive global blue-chip companies. So if the ADX were a person, it would be the heavyweight global institutional banker. It's pulling in major international capital and offering vast, diversified exposure. Now, what's really interesting about this slide is how perfectly these two sibling exchanges actually complement each other. Dubai captures that fast-paced regional retail momentum, while Abu Dhabi anchors the heavy-duty global institutional capital. They aren't competing. They are combining to form a unified, multi-asset financial powerhouse that provides immense stability to the entire UAE economy. Moving right along to Section 4, the luxury spending boom. We're going to shift away from the math of the stock markets and head straight to the streets to check out consumer behavior. So, a global economic insight report released by Visa in November 2025 revealed a pretty crazy trend. Across major global cities, places like London, Paris, and New York, economic uncertainty is causing a noticeable drop in luxury purchases. Consumers everywhere are tightening their belts. But Dubai? Dubai remains a totally defiant outlier here. Luxury spending isn't just stable, it is heavily outperforming its global peers. Get this, 1 in 9 Dubai residents makes a premium luxury purchase every single quarter. 1 in 9. That is an incredibly high frequency for high-end retail consumption. It's directly supported by the demographics, because nearly 37% of households in the city are earning over $150,000 a year. The underlying wealth of the population is just throwing fuel on this retail fire. As Mohammed Bardastani, Visa's principal economist, points out, the momentum we are seeing in Dubai underlines its position as a global luxury hub, supported by a strong base of affluent residents and steady tourism flows. But you know what else the data shows us? Luxury is absolutely no longer just for the top 1% elite. It's spreading rapidly to the emerging affluent and the upper middle class. In the UAE, purchasing premium goods has become a highly attainable, aspirational goal for a growing segment of the population. All right, Section 5, the gold standard. Let's bring the economic zoom in all the way down to a tangible, everyday commodity. These are the specific, real-world Dubai gold rates reported by Gulf News on July 6, 2026. You've got 24-karat gold sitting at 505.50 dirhams per gram. See, in the UAE, gold isn't just some abstract reserve locked away in a central bank vault. It's a dynamic retail commodity that thousands of regular people are trading daily in the souks. Knowing these specific rates really grounds all that abstract economic theory we've been talking about into a highly tangible real-world reality that residents interact with every single day. And finally, Section 6, the future outlook. Let's zoom back out to the 30,000-foot view and synthesize what all this means for the UAE's trajectory. So the crucial point is this: the world is facing some very real headwinds right now. The IMF is actively warning about risks from AI-related productivity shifts, wider fiscal deficits in advanced economies, and mounting public debt that's tightening global financial conditions. It's a lot. But despite all of that, the UAE is navigating this uncertainty with incredibly strong domestic momentum. They've essentially built structural fortifications against these exact global risks. Just to summarize the central bank's projections for the near future, the numbers are looking phenomenal. We're talking a 5.6% GDP growth for 2026 and a really solid 4.4% forecast for 2027. Inflation is expected to stay highly subdued, hovering around 1.8 to 2%. You've got those resilient non-hydrocarbon sectors like real estate and finance performing beautifully, and on top of that, an expected increase in oil production aligning with OPEC Plus quota adjustments. Basically, those twin engines of the DFM and ADX paired with insatiable consumer demand are keeping the whole economy surging forward. We are basically watching a masterclass in macroeconomic management play out in real time. By diversifying away from pure hydrocarbons, building top-tier financial institutions, and fostering an environment that drives intense domestic consumption, the UAE has really insulated itself from global stagnation. So it leaves us with a pretty provocative thought. As global markets brace for even more uncertainty, is the UAE writing the new blueprint for economic resilience that the rest of the world needs to study? Think about it. Thanks so much for joining me for this explainer, and I hope this deep dive helped you truly understand the numbers behind the boom.